One.
Hi, Warriors. Coach at TradeGATEHub.com, sponsored by TradeView. When I left you on Monday, I was talking about a turnaround Tuesday in the currency market. That's what happened. If you were in our chat room, got long 106.80 down here in euro. I've taken half because my big play is going to be on a sell in euro should we get up to between 108.50 and 109.40. Still a possibility that we could break to new lows before we get that, but right now dollar looking a little bit weak. This is my zone. This is the key zone for the next big position on the long side of the dollar coming in right around 102.40 or so. I have confluence there with a lot of moving averages, 102 being the line in the sand for this bear market rally to have a continuation. The Japanese yen is fighting its way back. I still think there's a chance that we make a move up towards 141 before it completes. And that's why gold is still under a little bit of pressure. I keep looking at this breakout line in gold, comes in now down here around 1918 or so. That's where I think I would be a buyer for at least a trade, maybe even back to 2000. Want to take a look at what's happening here in Apple. So Apple came out with their new product, the Metasphere goggles for 3,500. I know there's probably lines around the block trying to buy that. Again, I stress 170. See the confluence here. That's really what we need to do. Apple left a lot of gaps. Here's the earnings gap. Then it left a gap here last week. And then on the earnings, on the Monday, we gapped up, filled it, key reversal. So keep your mind open that Apple may peak. The real trigger is going to be back in the channel. So here's S&Ps. I don't think we're done yet. Showed this blue line when I was with Mike yesterday. It's coming in right around this 34 level, 43.40, right around there. It is possible that we get some type of dip back towards, 42 level first to set up more divergences in the S&Ps. And I want to talk a little bit about what's happening in the bond market because of the bonds, TLT, they're trying to turn. Okay, so we're a little bit lower here. I still have to respect the breakdown, and I have to respect it until I think the yen has peaked, and then I think we could get a correction and maybe a bond rally after that. So I'll wait for 141 yen and see where TLT is at. I still can't really let go of the fact that we confirmed the lows in October on both weekly and daily. So here's daily. Let me just tighten it up a little bit so you can see it. So here's the daily, confirm low both on daily and weekly. So, it's hard for me to ignore it when that's a big part of my work, is that eventually that we would get new lows. The markets rarely bottom when momentum and price are both confirming. We're getting a little bit of a pop in crude, and maybe we're going to revisit this 84, 85 level. But despite what the Saudis are doing, I don't think that the lows are in here. At 64, I think they will be taken out, and I'll be looking at potential longs. Then you look at copper, and we broke down quite some time ago. This looks like it could be just a bear market rally, just a little rebound from oversold before we get another leg lower in the copper as well. But really focus on the dollar. I think we're going to be setting up something pretty nice around that level, around where I'm talking about. Here's the confluence with moving averages, and we're talking about 200-day at 102.03 is where it's coming in right now, and we have the 9-day. I'm looking for the 50. Okay, so you have 102.03. So the 200's above it. Here's the 50 down here towards 102. And most people are only looking for a rally back towards these highs. I think we'll break out over these highs eventually. So really you have to be patient and wait for your areas. And just like silver is in no man's land between 24.5 and 22. Although I believe if I'm right about the dollar rally, we'll see silver under 21 again into late summer. Looking for July to be a pretty big risk off move, and something that's differentiating itself from cable and euro in the dollar has been Aussie strength. We've had a nice rally. I think we have to clean out the stops in Aussie right here and go to 68.5 before we get another good sell-off, maybe back to 3.5. This is going to be a long-term buy in Aussie. I don't think we're going to take out the 61 lows. So say we rally up to here and we get one more flush in Aussie to 63.5, I'll be looking to back up the truck. Keep an eye on both NASDAQ and S&Ps and look for continued underperformance by NASDAQ. We are starting to get some shorter term time frame divergences in NASDAQ. Here's one confirmed high. Here's two, still over 70. Next high in NASDAQ, if we take out this high for a 3, should be under 70. So close to correction territory. Of course, NASDAQ became parabolic just like the Nikkei. So I just want to address the Nikkei for everyone that gets caught up in fat investing. Here's your daily in the Nikkei. It's been a tremendous run. It's a key reversal. It may have something to do with the yen approaching a level and then the yen's going to come off, but you know, we could pull back 2,000-3,000 points in the Nikkei. Be careful following investing fads. Not saying it was a great buy for the last few years, but it didn't start getting the headlines until the last few months. So be careful with Japan here. And Mike will be with you at 9. And I have Michael Cowell with us, Urban Cowboy, on Thursday. Should be a great interview. Good hunting, be patient, wait for those important areas to act. That's why I had no hesitation to go the door on half for 40 pips in the euro, because as far as I'm concerned, shorter term, that's counter trend. I'd love to see this get back up towards 108.5, 170 on this move, and the Dixie to 102.5 in the next week or so. And that's going to be going back with the trend, because eventually, and that's why I want to get a good short on that. I believe that we could see this one parity again in the euro, possibly even a little bit under parity in the coming months. So that's going to be an important trade. And then after we get through this 105 level, I think we could see 110 in the dollar. I have a hard time believing any risk asset's going to perform well. The first wave off the lows, the metals paid attention, yields paid attention, a lot of markets, oil paid attention, equities didn't. But after this pullback and we start heading up for C or 3, I think it's going to get the attention of risk across the board. Good hunting. Remember, don't just count your pips, count your blessings. Check out TradeView, compare it to your broker,